For more on today's figures, let's bring in Andrew McKellar. He's Chief Executive of the Australian Chamber of Commerce and Industry. Andrew, thanks for your time. First of all, your initial reaction to these numbers, a bit higher than expected.
Yeah, Kieran, great to be with you. Look, no doubt about that. It is a concerning number, a bit higher than expected, and I think much higher than we would like to see inflation. It's more than twice now the Reserve Bank's official target. So there's a lot of work to be done. I think the one thing from a business point of view we would say is from here we urge the bank to be cautious, not to overreact to these figures that we've seen today. The evidence we're looking at would suggest that business conditions have started to soften appreciably in the December quarter.
This is the challenge, isn't it? So from the business community or the property sector, you can see signs, or even the labour market, the job numbers falling, overall job numbers falling, I think it was by 15,000 last month. So there are signs, but the underlying inflation rate and the headline rate still not where the RBA wants it.
No, it's stubbornly high, but that's right. If we look through the sort of data we were beginning to see in the December quarter, we're seeing orders starting to pull back, output slowing. We're seeing profitability being squeezed, so it's not just consumer prices that are going up. Business input costs are also still stubbornly high. We hope that this is now the peak and we'll start to see it coming back, but it will take still, I think, a bit of work ahead before we get to that point.
There are some economists that are calling on the RBA to go hard in their next meeting, though you speaking on behalf of your members, the business community, you're saying there are already softening conditions. So tread carefully, RBA.
Absolutely. We would say, proceed with caution from here. Don't overreact. We expect that there will be, 1, 2 more interest rate increases at some point in the pipeline still to come, but they should not overreact. I think here you've got to see fiscal policy and monetary policy working together. The government will have some work to do in the budget to ensure that it is telling a story about how it is going to really make some progress on the effort to get the budget back into an improved situation, get that process of budget repair well and truly underway.
Well, it is challenging because there's a range of imposts for the government in terms of the budget, whether it be defence, aged care, NDIS, health. The budget is looming in May, and you're saying essentially don't leave all the heavy lifting to the RBA.
No. I mean, interest rates are a very blunt instrument. If we have to rely on further interest rate increases, then we don't want to see that squeezing the life out of the economy. That will be worse. It will end up costing employment, costing jobs. If that's the case, we want to preserve as much strength as we can. The government in its budget will have to take some tough decisions. The focus has got to be on the expenditure side of the budget. We can't have a situation where they're contemplating new taxes or tax increases.
It's been said many times that the increase in rates is a blunt instrument, but it's a delicate move as well. It might be blunt, but they go too far, and we could see with mortgage holders coming off fixed mortgages this year increasingly. The business community also with the softening conditions that you report. It's a delicate balance as well, isn't it?
Look, I think there are some vulnerabilities out there, and that's right. Households with mortgages, many small businesses, of course, are secured, with the mortgage on the primary residence. So if we see interest rates continuing to press up, if they go too far, then that can really have a disastrous impact. We've got to avoid that. We've really got to be very careful to try and avoid overstepping the mark there and causing real economic damage.
Andrew McKellar, Chief Executive of the Chamber of Commerce and Industry. Appreciate it. Talk to you soon.